It's very easy to, be an addict, stick around, and you got to reevaluate what that time is used for. What's happening? We've got another video scan coming at you for July 10th and the week ahead. Last week, short week, 1 half day, 1 day off, and then 3 full days. This week, full thing, and I am back to the screens. First time in 7 years that I have actually really taken off after the first hour. Maybe one day I was there for like an hour and a half, but the best thing was 8:50 a.m. broadcast every single day. Yes, I've got a lot of names on the watch list. But as you guys know, I only have a few of the main watches, which is typically where the volume is, the range is, and where I feel most confident about the potential of the trade. And by 8:50 a.m. every single morning, when I get on the mic, I have that down to maybe 2, a max of 3, real focus names, things that, I'm going to likely trade off the open. And so everything that we went over last week, everything that I was prepared for, it happened. It happened right after the open within the first hour. So, you got to ask yourself, what are you sticking around for? Everything that you got prepared for worked. Let these things, continue to work for you. Put in a stop, take some off, whatever you want to do. But for me, I've been, breaking promises for 7 years that this week I'm going to take off. This week I'm going to get away from the computer. This week I'm not going to trade much. Yeah, that never happens. This year it did. And so that was important for me. I am continually reevaluating balance. It's very easy to, be an addict, to, stick around, and you got to reevaluate what that time is used for, and are you paying to stay? Did you make a lot off the open and then you're slowly giving some back throughout the day? And if that's the case, you might as well be out at the beach or doing stuff with your kids or whatever. So everybody's different. Everybody has different priorities. There's a lot of young guns who that won't apply to at all. And then there's a lot of you that maybe are in the same boat as me. So that was a really good, I checked the box finally, and I'm pretty pumped about that. So remember, are you trading to live? Or are you living to trade? Right? And, I think that at some point you've got to make that switch. If you want to, absolutely crush it and really become a fantastic trader and really, change your life. Yeah, there is a point where, you got to kind of teeter with, the fact that you got to give up a little bit of the good life to get to that next level. But at some point, if you don't take that back, it's always going to be that way. So that's kind of what I'm working on, as we've talked about it. So anyway, one other note, one of the best buys that I've made, I said it on the video. This is the actual computer. It's quick. I bought the best one. I think it was like $900 or $1,000, but it's small. It's got 2 USB-Cs and 2 HDMIs. You can do 4 monitors plus USBs. You can do probably a ton of monitors, but you really don't need that many more. But that's more beneficial than having, a trading PC at each location. The cheapest part of a trading setup is the monitors. So if I buy a bunch of monitors, or 2 and 2 or 2, whatever, and I have it all the same at every place, all I have to do is bring this. The worst thing for me when I was traveling, I did have a setup at each location, but sometimes you got to update drivers, update different trading platforms. Maybe things have changed. Maybe you're not using, like Trade Ideas. I've got to reevaluate my screen space here because I don't really use them anymore. I use the scanners that Max has created for IU members. And so anyway, this was fantastic, and I really like the ability to just take this, buy a keyboard, buy monitors, buy a mouse, leave them wherever, at the location. That's the cheap part. Bring this, plug it in, and done. And I would say the other piece was, every single time I'd reset up if I was doing like a mobile trade station with those mobile monitors. You kind of figure out, how it's going to line up each time. And so, that's just something to think about. And if you guys are in the market for that, check it out. You can get them for like $500, but I bought the better of the bunch just because, there is a lot that I do on there. I wanted more memory, wanted more hard drive space, and all the good stuff. So, anyway, as I said last week, check the scan for the winners. And if you did, obviously I forgot. So I did not forget this week. And I've got all the winners for last week, this week, and then Icon Meals as well. I'm wearing my Icon Meals shirt. Todd always gives me a box to give out to members once a month. And so Philly 501, you've got that. And as you know, that's the food that I eat each and every single day. As a trader, you know that sometimes it's 4 p.m. before you realize that you hadn't eaten and you're wondering why you feel like crap. So, YouTube, CatHawk, Bayard 1332, Big Trades 665, probably killed that name. And then Twitter, type _403, Scott1, Reeve1, and Trader Ant. You guys have all got the t-shirts. Yes, that was 6 winners, 7 including Icon Meals. So I did make up for it last week when I forgot. Let's see. Hopefully you guys watched Max's interview. I think I put it on scans last week, but I didn't mention it on Sunday video. We put that one out and people loved it. It's really nice to see the man behind all of the scanners that you guys now see. I think one of the best features, and I say it all the time, the high a day, low a day, hit list is absolutely amazing. It's literally the only scanner I need. If I had to pick one thing and be able to make it through, that would be the one scanner. Now, I asked for YouTube questions last week. So anybody that left a YouTube question, I picked a few of them. And the first one was, thank you, Nate. Explanations are always helpful for future videos. Perhaps explain what staying heavy is. If you're able to anticipate the flush and things mentioned, and for the things mentioned, how does volume and price action look like when things are going to happen, when they are happening? So, heavy, basically, the analogy that I use is like a basketball, right? If you were gonna slam a basketball on the ground, it'd be a one big bounce, smaller bounce, smaller bounce, smaller bounce, smaller bounce, and then it'd start to dribble. And so the heaviness is when it starts to really dribble towards the ground. And then eventually, when it would roll or stop or break down, that's kind of the floor break, right? So the heavy is when it retests. And we talk about like swipe tests where, it's very easy to get on the right side of a trade, right? On the short side, and everything's great. And then a lot of times you see it just swipe back. So the goal is to let it swipe back and fail, swipe back and fail. And each time it swipes back and fails, it's getting heavier and heavier and heavier because there's more covers that are coming in. There's more people that maybe are buying dips. You want people to feel comfortable buying dips, right? And that's why when we talk about like certain key levels, I always say, hey, the more it trades over that level, the better. Because eventually when it comes back under, those people are all going to be on the wrong side, right? Everybody that bought up here is now going to be like, uh-oh, this is sort of the line in the sand. This is the support, breaks under it. Now they start to become a seller. You don't want to be the only shorter, the only seller, right? If you're the only seller and you're a short, then who knows how high it's going to go. You want to be on the same side as sellers. So as that dribble starts to get closer and closer to the floor, that's when things start to get really, really heavy. And again, you want to see it kind of swipe a few times and fail in order to assume that it's going to stay heavy. Just because it breaks that floor level does not mean it's confirmed it's going down. As you guys know, sometimes you get that dip in the rip. So remember, we want to see something swipe and fail and stay heavy rather than swipe and fail, soak, and start to kind of, continue to grind. That's when people get in trouble. And that's what you have to recognize, especially in this market, because, even Rivian, CCL, huge fails, comes back, right? We need to see it actually fail to follow through. And most of the times in this market, especially when we're going straight up, it doesn't. Next question was, here's a question. Do you think A+ setups have a higher or lower chance of staying heavy after failing support for the first time during the morning run? They are more extended, but I feel like when I'm excited for it, so is everybody else, and it's likely a trap to keep going, whereas less crowded, less ideal extensions seem to fail cleaner, less range, volume. Example, IONQ, last Friday, 9:50 a.m. got me, turned into a beautiful fail on the 1430s later, but it just seemed to hold up longer than previous times. Absolutely, because there's only so many stocks that are going that line up. I would say AAOI, APLD. We talked about APLD last week, where you have to assume everybody wants the same thing. So there's an edge in that patience and letting everybody else try to figure it out, and then actually being a little bit late. It pays to be a little bit late. You're talking about potentially nailing a trade for $1 or $2 for the downside, and meanwhile you're afraid to be 20 or 30 cents late. And meanwhile, because you were afraid to be 20, 30 cents late, you're $1 or $2 too early, right? So same thing with IONQ. When it's in a bull trend, when things are going straight up, you should assume that it's going to absorb. So what I do in kind of the cheat sheet for a CVNA and AI or RIVN, just like on Friday with those levels on RIVN, I saw a lot of people kind of attempting to basically short it every time it flushed. I never want to fall for that one candle. I want to see it fail and fail and fail and flush, come back and retest. And remember what we were talking about before, I wanted to see it stay heavy. So just because it breaks under this level, what if it breaks under, comes right back up, consolidates and heads higher? And that's when people get stuck, when it breaks under. So I want to see it break under, come back, fail, come back, fail, come back, fail, and break away. And at that point, it's confirmed. What voids it is if that level started to reclaim and head higher. So I think that should help you. But yes, IONQ, and it's not going to always be the case. But we're in a market that things are going straight up. So you got to assume that flush is an opportunity to exit. And if it stays heavy, you can rescale. That's the biggest thing. IONQ, you nail it off the open, great. Guess what? 3 minutes later, you're wrong. So it's all about, Rivian was the same way. Every single day, a gap flushed, consolidate, head higher. CCL, every single day, gap, flush, consolidate, head higher. APLD did that, AAOI did that. So remember, before 10 a.m. is not your patience trade. Yes, there's going to be a trade or two that prove me wrong, and it's going to stay heavy right out of the open. But for the most part, recently, in the last couple months, when things are just getting absorbed, most of the time, the move off open does not dictate what it's going to do the rest of the day. Or it may, but it's going to do just enough to get you out, squeeze you out, and keep you away, and then eventually it will. So again, trade, or in my opinion, I treat a trade prior to 9:45, 10 a.m. different than a trade after 10 a.m. And then another one sent in, Nate, for the liquidity trap setup, how many days does it have to hold before you consider it a fail? Also, which is more likely to become a liquidity trap? First day with a strong run, or first day red fade, both having strong volume? So it could be any, but really it's about where it closes, and then if it starts to reclaim over that level. Where if it reclaims over, if you were to take the VWAP on a particular day, and if it comes down, and then 3 days later it's over that level, then most people are likely on the wrong side, especially on the short side if it's over that level. So it doesn't necessarily mean if it is, it doesn't necessarily matter if it closes green or red or fades one of the examples recently, Caribou, CRBU, had that huge gap up, runs, and then it flushed into the close, right? So the candle looks like up and then down, right? And it has a small green candle, but a huge wick. And then the next day, what happens? Straight back up. So I usually call that like a transitional day, and where all kinds of gap sellers can go ahead and sell throughout the day. Shorts size in, they nail it, fades off, and then they stay because they're up nice, and then the next day it just goes straight up. So it doesn't necessarily mean one thing or another if it opens, if it closes strong or if it closes weak. It's all about the setup over the next, usually T+2 is what I look for on the smaller caps. And then lately on the daily, within the next, maybe 2 to 3 weeks, if there's a huge volume day and then it starts to kind of pick up and it has that liquidity trap breakout on the daily 2, 3, 4 weeks later. There's that positioning day where everybody positions, then they let everybody work out, and then round 2 on the leg up. So next up was a couple questions from Twitter. One was, after blowing up my 3 big accounts, coming back now 1 year later with a modest 5K account, what would you do to focus on it to grow? One of the biggest things is getting away from your starting point, right? Whether you have 25K, 5K, for the most part, especially with 25K, I always tell people to just, forget trying to kill it. Your goal is just to get away from 25, right? So you can get away from the pattern day trade rule. Do whatever you can as far as taking gains. It's not about, well, I could have made X. It's about stacking that income away from 25 so you can get to 30, 31, 32, and then start to have a little bit of freedom to let trades work and not worry about dipping under the pattern day trade rule. When you have 5K account, I would recommend, potentially 2 things. I would have a paper trading account. I would go through the motions and figure out what you are best at, and then apply that towards your 5K account. Find out, what do you do best? And most people, it's simple. What do you suck at? What are you good at? And for whatever reason, people always go back to what they suck at and try to figure it out. And in that case, it could be a small cap, short side, and you get on the wrong side, you get, blown out. What happens if you avoided that? How many more chances would you have to make this work in your career? And most people don't, put 2 and 2 together and realize, they're one swipe away from ending their career. So avoid what you're not good at and focus on what you're best at. And I always tell people to look at, strong charts, weak opens, for potential like an ABCD red to green type of setup. Either that or some sort of failed follow through momentum. Those are 2 basic setups, and they work very well most of the time. Next question was, when exactly to cut losers on the short side? When to know it isn't breaking down anymore? I would really appreciate you to cover this topic. So on the short side, typically, if I start into something, I have an idea of what I'd like it to do. And, I have an idea of where it could extend to, because sometimes I'll start into a name and, I want it to go 30 to 50 cents more. I'm getting in just in case it doesn't, and then I can start to scale into that. But I have a small batch on just, in the event that it does go, I'm not upside down. However, let's just say you're like, all right, I'm starting in. Ideal entry, like ideal is if it ramped up another 30 cents, exhausted out, and I enter. If that happens and it stays strong, at that point, it's proving, your thesis, your goal, everything wrong. So if you've added or sized up, obviously you need to adjust. If you just have that starter, you need to figure out, are you going to stick around or are you going to move on? And, if it's proving you wrong, meaning you wanted it to go that extra 30 or 50 cents and now it's firmed up and it looks like it's going to break out again, that's up to you, And for me, I'd rather just move on. And it's small loss because it's a starter. When you get into trouble is when you try to fix that starter. And that's where a lot of people get in trouble. They try to fix their starter. And that's why you always see me remind about that first red candle be cautious. Don't just try to size in and fix your entry, because then you're going to start to compound your loss. And that's where a lot of people get a lot of losses, especially on the front side of the move. There's nothing wrong with shorting a stock that's going up like this. There's plenty of dips along the way. But what happens is people start in, goes a little higher than they expected, comes in, they add, holds. They're like, uh-oh. Comes in a little bit, they add, comes back up, comes in a little bit, they add. And now they have 4 times what they wanted, and it's at the high of days, and they have no edge. So when it voids your thesis, just move on. You can always get back in. Nate, can you cover how you know when a stock is crowded short on the intraday basis, since short interest data only comes out twice a month? The small caps and all this kind of stuff, nothing that we do has to do with short data that updates twice a month. This is all, if you've got a 5 million share float and it's traded 80 million shares by 11 a.m., I mean, just that, in my opinion, is just use common sense. Like obviously we've got a 5 million float here. We've churned 80 million shares, and it's very, very trappy. It should have died, and each time it flushes, it swipes up, flushes, swipes up. So you could probably assume that more, maybe the entire float's short, or 50%, or 80%, or 100%, and so that is a different kind of scenario than something that, you're talking about that maybe matters on a Carvana or Rivian or things like that. So, just getting that sense of it should have died, and yet it keeps on holding on, I think is really where you get a lot of that information from. And then last but not least, you're great at predicting ranges, hitting Mullen perfect for the 26 high a day on Scan 77. Any tips on how to come up with ranges? I always look left. Just draw your lines. Get used to drawing lines. And look at where things were hanging out. Look at where things flush down from, right? So sometimes you might see like a trend, a lot of volume, and then it comes down on low volume, just comes apart. So there's a good chance it could come right back up to low volume, on low volume, and retest where it broke down. So sometimes you'll see it flush down, come back, gap up, retest here, fade back off. And that's exactly what happened with Mullen. So I would always get used to drawing lines, look left, review charts over and over, and you're going to start to kind of be able to see this stuff. It's not about being right every single time. It's just about what is the likely outcome. And a lot of times you'll see that they end up doing the same thing over and over again. All right, last but not least on the video topics, I've been trying to make these short, but I ask for questions and then I screw myself because I like to answer as many as I can. But hopefully you guys saw the fireworks sale. So if you have any interest in IU, now is the time. It ends tomorrow, and that link will be in Scan as well as Twitter. You've likely seen it. We talked about what are you best at, what are you worst at. So what are you best at? Exploit that. What are you worst at? Avoid that. Predictable ranges. GRRR from Friday. I wanted to go over that right before the video. So I'll go through that once I have my charts up. Failed follow through hack, I called it, for Rivian. That was exactly what we've talked about on Carvana, on AI. And every time you see a trend, and I really want you guys to think about this, especially on small caps or big moves. APLD, AAOI, Rivian, CVNA, AI, all that kind of breakout. IONQ. Every time a stock flushes and catches, right? Flush comes back up. Same candle. Flush comes back up. That is your level. Goes up higher. Flush comes back. That is your new level. And until that line becomes the top, there is no reason for you to be of any size. And a lot of people make that mistake because as soon as it flushes, that's the red candle they want to scale into. Not in this market. Maybe in some markets, yes. Maybe years ago, yes. But in this market, that is just a dip along the trend. And if you use that to size up, you will get chopped up. I want to talk about how one name can fuel the sector and theme. Mullen, MULN. You saw, that went from basically a dime or 12 cent, whatever it was, to 30, 32 cents, 33 cents. TTOO, ZVSA. I probably killed that ticker. I don't remember what it was. But it might have been right. ZVSA. But there was like maybe 5, 6, 7 names gapping up. MCOM, another complete, lack of a better word, fraud of a company. Fraud in the sense that they're just selling you a dream and selling you paper. The more you believe, the more paper they can sell. CEO is a complete whack job and just sits on Twitter all day talking about naked shorts. But understanding how that fuels that price range of names. And so normally you may not care about a 5 or 10 or 15 cent stock, but in this market right now, surrounding that Mullen move, there's edge. And there's going to be a lot of trades that gap up that are cheap because of Mullen. And everybody's going to be like, man, this is the next Mullen. It's going to triple. But most will not. So there's a huge edge there fading that trend. The ones that do hold, obviously, risk management comes into play. And then the last note I had was the transitional day on Caribou, CRBU, and exactly how we've talked about that candle that comes down and then the next day just straight up. So they let all the shorts in, they let all the sellers sell, right? It looks weak because they let the gap sellers sell, and then the next day, heads higher. All right, last warning, Traders for a Cause, next Sunday. I think right around 6 p.m., right on Sunday video, they're going to go on sale. So make sure you're ready. People always ask, how do you connect? How do you network? How do you meet certain individuals? This is how you do that. More often than not, you'll realize that the people that you meet in person when you go to these events and you network are going to be the people that bend over backwards for you. You're taking that leap of faith to get there. You're taking the time out of your day to get there. You're paying to be part of a premium event. You're going to network with some of the best traders out there. You're going to connect with them. You're going to exchange information with them. This is the best event for traders, no matter what level you're at, to network and get in the same room with some amazing people. So, as always, not always, the last 2 years, it's sold out within 24 hours. So I just want you guys to be ready. Those are going to be the early bird tickets. They are going to be on sale next Sunday at 6 p.m. All right, let's get into Scan. All right, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for informational and educational purposes only. If you're okay with that, you're in the right spot. If you're not okay with that, shut the video off, and we'll see you later. I did want to go over GRR real quick, and we talked about this particular trade pre-market, and I had drawn these lines basically out early, and let me just put this in there, 380 and 340. So this was the discussion that we had pre-market, and basically kind of identifying where there's a little bit of resistance, which then becomes support, and where there's resistance that stays resistance until it ends up swiping over it. So if you were participating and you're ignoring the fact that these 340s were holding, which is a level that we knew from pre-market, and if you ignore the fact that this swiped up, you've got this consolidation. So you literally had, it's still a loss, but you literally had probably what? Let's see. This was 1016 to 1041. So, basically almost 15 minutes or so of a choice. Do you stay sized up or do you move on? And so this was the consolidation period, and you can see that it started to kind of base at this 4 level, and then this 4, basically 410, 415 level became the next launch spot. So anytime that we usually have that swipe, granted you do risk going into a circuit halt on some of these things, but anytime you've got this consolidation, you do have that period of time to make the right decision. And most people don't, and then it turns bad real quick. So keep that in mind, but I wanted to go over, number one, the levels that we had pre-market, and understanding that once this, right over here, you can see this exhaust out literally perfectly to the penny, and that was from the pre-market line. However, what voids that clear out? So yes, you had this perfect clear out 380s, flushes down, but it immediately gets voided. Why? Because 340 absorbed, soaked, and held. Higher low, and you can see a dip and rip, dip and rip, dip and rip, dip and rip, and all these dip and rip, dip and rip, dip and rips. All of the signs are there. So if you stay there, you're asking for it. Then, there's no sense trying to figure this out. There's a little bit of a small failed follow through setup over here. But, you can see right over here, this prior top, which is 573. So we'll put a line at 573. And look left, and what happens? 570, 57. Clear out move. I still don't care about the entry. I'm interested when it starts to break down under this prior level of support. And if you go back and look left, you can see dip and rip, all the signs that it is not breaking under this key level. Finally does, and now on pops, I'm interested because we had the clear out move, right? I'm not interested in anticipating this. What if it went into a circuit halt? I'm interested after it exhausts out, and we're met with a huge amount of volume on the exhaustion move. All right, so for main watches, CSTL, really nice runner on Friday. We had a great opportunity right off the open, and at that point, it just consolidated, kind of worked people in and out around that VWAP level, and then continue to head higher. So I think that these are going to become key levels. This is all kind of stuff that I look for. This congestion area. And then dip and a rip, dip and a rip, dip and a rip, right? So they let all, whoever wanted to sell, shorts, got, maybe confident for a candle or two. And then they stick around and all of a sudden it skips right back up towards the high. So again, it goes to show you, this is 9 a.m. and then right off the open, flushes out. And then by 10:30, it's heading back up towards the high. So in my opinion, the higher it trades, the better it trades over 21. Eventually, when it pulls back, that's an area of interest. You can see that it's kind of peaked at 21. So if it gets up and over 21, then we have covers coming in. We have potential breakout buyers coming in. And what I get interested in is when it comes back under that level of resistance. So otherwise, I'd be looking for a weak open versus that VWAP level, and then a potential for a red to green move. We've got Rivian. Rivian's been a fantastic trader. It's not every day that you get this much range and this much, kind of craziness. I mean, it's literally, it's been kind of faking everybody out on this breakout, right? 1585. I mean, in hindsight, if you go back, 16 was kind of a no-brainer. And that was actually the goal. Go back to PLTR. And I forget the other one, but we talked about having that kind of top here, 1574s, 1566. Over here, it gets into the 16, et cetera, et cetera. But then over here, you've got a gap over it, comes back, firms up over the prior resistance level. So that prior resistance now becomes support. It came back in, tested it, starts to grind up. And then that way, clean, perfect breakout. No different than PLTR. If you guys remember, we've had this conversation multiple times, but it was this 1030? Yeah, 1031, and then I think this one was 1030. Yeah. So 1030 became that level. So this gap day comes back, it holds versus that 1030 level, and then it never looked back. Exact same concept. Same thing. Straight up. Crazy squeeze. It goes from a breakout move to this dip and rip, squeeze mode now. So now we need that exhaustion move to happen to the upside before it comes back. Now, this could be the start of a major bull run. Maybe it goes 40, 50 in the long term, right? 3-6 months out. But all I care about is the next 2-3 days or week of, sort of what I can anticipate or react to. And if that's the case, I would like big gap up. Ideally clears out some levels from from Friday, and then starts to fail to follow through. So ideal exhaustion zone 25.10 to 25.30s, 40s, and then failed follow through. Sentiment shift is still at that 24.40 level that I gave on Friday. CCL, notable weakness, ideally gaps, pushes into the exhaustion zone as well. Next up, failed follow through section. GRR, R. We went over this exhaustion move. And at this point, I'd love to see it gap up. I do think it's probably going to have a weak open. I'm thinking that it actually probably opens under 450s, right around 440 to 460. It would be my guess. I'd love to see a push up towards the 470s and then fail. And then I'd be looking to fade that trend back towards the 380s. Ideal would be a gap up 5, rushes through 5, 510s, 520s, and maybe some sort of exhaustion zone into the 530 range. But that would be the ideal exhaustion zone. AI, higher the better. Lot of good action here. A lot of good failed follow through momentum. I put these on a moment ago, but you can see that it just never looked back once it broke this trend. You can see the clear out move, same kind of concept as GRRR. And then we've got the failed follow through setup, the bouncing ball against this, basically this floor breaks, and then steady fail from there. So ideal, 40 exhaustion or any good parabolic versus that 40 level for unwind. Mara and Riot, daily watches, nothing that I'm crazy excited about, but higher the better and staying on watch. BTAI, higher the better, and failed follow through. This, to me, reminds me of something like AAOI or APLD, where everybody kind of wants it. Yeah, it probably should fade. Yeah, it had some sort of quick rally, but it's holding extremely well. So the more that it soaks at 10, the more chance that it has to do one last squeeze. So I'd love to see some sort of gap up and exhaustion move versus this 1050s level. Other than that, continuation side of things, CVNA, I'd like to see a weak open. If 29 absorbs, 28.80s, 29 starts to firm back up. Good chance that it has a nice red to green move. TMC, KSCP, and VRM, all continued breakouts. KSCP was a nice idea this day, came back, got absorbed. What I want you guys to see is this dip and rip candle. Resets the chart, and now at this point, I like all dips versus this level over here, this low. Obviously, it broke out, but I'm just trying to go through, good ideas. TMC was a big picture idea, and it continues to break out, as well as VRM was a big picture idea. And we talked about the Y, the dip and rip candles, and I was positioned, but I am no longer, unfortunately. IMNM, same deal. IMNM. Dip and rip candles or absorption candles, these are the wicks we talk about, so I'd be watching all dips. It's not a breakout trade. It's a join the trend along the way type of trade. I feel like if you buy the breakout, it's probably just going to fail. And then you look back and it's going to be, say, 10, 11, 12. And had you just worked on a better entry rather than a FOMO breakout chase, you might still be in that trade. Last but not least, APLD and AAOI, two peas in a pod in my eyes. Just let them do their thing, and I'm looking for failed follow-through setups. So that's about it. I've got a ton of other staying familiar charts. There's so many names right now, but every day I've just been focused on 2 or 3. So don't let a big watch list, kind of scare you into like, how the heck do I focus on all those names? I don't. I've got price alerts. I feed other people that I know trade these, versus myself, because I know when and if they break out, this is their setup. So that's one way that you can network with people. Know what types of trades they look for. Judah has, a very similar eye towards the big picture, which is divided champ in the room. We have a lot of the same charts that we're watching. So I know that if I feed him something, he's going to set price alerts. And That way it ups the chances that I see the breakout, because he's going to be on it, I'm going to be on it, and we're going to be watching the same thing. If I skip it or if I'm on off desk, he'll probably mention it, and I'll go back through, see it, things like that. So that's one easy way to start networking with people, put things on radar, remind them, because it all ends up coming back around if and when you forget a particular trade. So apologize for the long scan tonight. I had some questions, answered the questions, had a lot of catching up to do, and we'll get back to regular Sunday videos with some of the recaps that I know you guys like. But otherwise, like I said, we've got Traders for a Cause next Sunday, and we have the last day of the sales today. If you're looking to get into IU, make sure you do. And last but not least, make sure you check out the video with Max. You can get us a little glimpse of some of the features that we've been adding to IU over the last year, and plenty more to come. So have a great rest of the weekend, and we will see you in the room.